Let's look at stock markets. They, more than anything, are consequence-driven. Trump has a tweet up today. Trump tweets again, down. Someone announces this, all it goes. Someone says growth will be slow, everyone's miserable. Someone says growth will be okay, everyone's okay. It's chaos because the difference and distance between comment A and comment B is getting narrower and narrower and narrower and narrower. Days, hours, minutes. Why? Because that movement is making people lots and lots of money. Robots are trading on the stock market saying, take advantage of that 0.01% and do it lots and lots of times and make a fortune. Not us, others. But that's what they want to do. So they need those tweets. They need all that media. They need all those things to create a reason for stuff to happen. So we're seeing lots of short-term adjustment for issues that may have long-term implications. Even the other day, National Australia Bank announced a $1 billion provision for extra costs, payout under the Royal Commission, etc., etc., etc. Its share price, market capitalisation, went down $8 billion. So it said, hey, we're going to lose $1 billion, and by the way, it makes $6 billion a year, so to them that's not much money. $1 billion adjustment, $8 billion stock market reduction. That's manipulation. Someone's overcorrected a sensible activity and made it unsensible. Doesn't make any brain thought. But look at the profits these companies are making. You know, I think if you look at the banks again as an example, they've now provided for hundreds of millions of dollars of fines. But that's inconsequential. Inconsequential. There's Purdue handing over the company that was allegedly worth billions of dollars, but that's inconsequential to them. What I don't understand is why aren't people asking, how do you accumulate that much? We're just treating as if they've got some magic machine that's printing money. We forget that it's coming all from us. The reason they can get away with it is because it's only a little bit from each of us. If they came in and swooped and took 50,000 off all of you, you'd be riotous. Be like Hong Kong down in Wanchai. But because they take $5 here, $3 there, $50 off a few billion people, off a few billion transactions, no one notices. So we all go, it's all okay. No problem here. Keep moving. But it's amazing. And again, I wasn't for at all the Trump corporate tax rate cuts. But the amount of revenue gain that that's had in America and the lower taxation is scandalous. But no one says anything about it. The US deficit's still at $1 trillion a year and rising. The debt is so large you cannot calculate it. I don't know if you've ever looked at the US debt clock online. It'll make you dizzy because it moves so fast. But the only source to fund it is stock markets. And we've seen now in the last 4 years, ever since China stopped funding the US deficit, every year we've got volatility in the stock market that coincidentally equates out to the US annual deficit. And I'll show you that in a minute. And that's just a reality. And we're seeing valuations for stuff beyond imagination, beyond belief. Just as a brief example, Beyond Meat, which should really change its name to Beyond Belief, $8.6 billion valuation of that company just went online. Now bear in mind, it's actually fallen its share price in the last 6 months by 30%. So it used to be worth about 12 or 13 billion. Its turnover is $100 million. Turnover. Its profit, actually it doesn't have one. It's losing $30 million a year. And its net assets is $80 million. So net assets, 80 million, market capitalization, 8.6 billion. Now, I may not be a very good accountant because I've tried to divide, multiply, add, subtract. I've done everything I could to make that work, and I can't. It's fantasy at best. And Uber, the longest startup in the history of man. 10 years in the making, worth $48 billion apparently. It turns over $11 billion. You can't sneeze at that. But it made $1.9 billion last financial year. Its net assets are 10, so that's not bad, only 5 times. But I'm being kind when I say 1.9 billion profit, because that was just an apparition 1 year, coincidentally pre-launch on the stock market. It lost 4 billion the year before, 4 billion loss. This year, estimated loss, $8 billion. Now, I don't know about you, I couldn't fund that. Is there anyone who could fund that shortfall? And Salesforce, it's been around a long time. It's a great company, can't knock it. $124 billion market cap as of today on a $13 billion turnover. So 10 times turnover multiple, making just under $1 billion a year after tax profit. 124 PE on an established company. Now, I've just picked 3. I'm not trying to pick on them. I'm not saying they're bad companies, not at all. They're all real companies. They're all doing real stuff. They're good. I've got no problems with them. But if you had a spare $124 billion, would you buy Salesforce? Even if you had a paltry $9 billion, would you buy Beyond Meat? Probably not. You'd be next to Abramovich on the Mediterranean in your own super yacht, wouldn't you? But that's the world we live in today. Who is allowing this to happen? And again, don't forget, this is a time where the education level of all of the alleged advisors has supposedly never been higher. MBA, multi-degree, super business school. I don't know what school they're going to. I'm pretty sure they stopped at kindergarten. But that's the way it is. But if we have a look at the stock market year on year, you can see it didn't do too badly. The black line is Australia, and you can see it led the pack in the last 12 months, as we did predict. And I've got to tell you, I think it's got more to go, because our banking sector is still 20% undervalued. They've been pulling that down. So we've achieved that with an undervalued banking sector. Ironically, it's one of the things that helped it do it, because the banking sector was twice as undervalued last year. So if you'd bought banks last year, they've gone up 20%, actually 30% if we did it 2 weeks ago. But they took back 10% just recently, because that's what they can do. But good year, 8% roughly year on year. And you can see there's a little blip at the end. That was just for no reason, just because you can. And then the Dow Jones, just a little bit above. And that's what we predicted, volatile, but a little bit above. And there's the FTSE. Even with all the mess going on in the UK, the FTSE more or less came out square. So it can't be that bad after all. But this is the change in the world. And this is pretty much what I said last year. I said, I don't think we'll get a crash sometime soon. Theoretically, we're due. The last one was 2007. We can't be too far away from it. 12 years is a long time in a stock market bull run, okay? But the reason I don't believe that we'll have another crash, I said, was because we're having mini crashes all the time, if you happen to be here. And let me show you what I mean. 4 mini crashes last year. Did anyone know that we had 4 mini crashes last year? Of course not, because we're oblivious to it all. We're sick of hearing it. We're overloaded. Unless you're in financial markets, you just don't care. But it affects us all. It affects our pensions. It affects our well-being. It affects, our futures if we're investing. So we should care. We should be oblivious. We shouldn't be oblivious. But you can see substantial 5% plus adjustments. Now, this is where the manipulation comes in. Tweet dropped the market 5%, but you always have to remember one-way traffic is not good for anyone. If the stock market just falls by 5%, that's just bad, because I can't make money if it only goes down, just like I can't make money if it only goes up. But when it goes down and up, that's how I make money, because I can buy high, buy low, sell high, and keep moving through. And that's what's going on. And again, the problem is, it's not coming to us. They give us the crumbs, they take all of the meat. And trust me, they're not buying from Beyond Meat. They're going to the real butcher. Thick, juicy ribeyes. But that's what it is. And this is the same reason I'm going to tell you today, I don't think we're in for a big crash next year either. Now I'm going to go asterisk, there's an election next year. Now I'm going to hold my nerve because by the time we're doing this seminar, the election will not have occurred in the US. So I don't know if we'll see a massive push upwards or downwards leading up to the election. But Trump has allowed a lot of deregulation and a lot of lower tax. So if he looks like he's going to lose, expect the market to pull back. If he looks like he's going to win, and let's face it, I think his biggest advocate was Sanders, who's just had a heart attack apparently, and then Biden, who he's hoping to lock up for doing stuff in some weird country. They could end up sharing a jail cell. That would be funny, wouldn't it? But it's hard to know which way it could go. But again, we won't be able to influence it. We'll just be unintended consequence. Or are we? Maybe we're manipulated consequence. I'm not sure. It's all crazy. But that's a reality we live in now. These mini crashes have become the new modern norm. If we have a look, and these are the same stocks that we put on every year, so I'm not recommending them, I'm just putting them as a reference point. But you can see, and this is where I'm getting older, and that's why I don't know if I'm getting wiser or madder. It's probably both after the seminar, you'll think. But you can see, there's the profits. Look, BHP up from 7.7 to 9.5. HSBC, on a bad year stock-wise, the stock went down 12.5, its profit went from 12 to 15. Bank of America, 18 to $28 billion. CBA in Australia, not doing that well, went down, provisions only. And again, this is one of the jokes of the Australian system. NAB, ANZ, they've all come out with, oh look, we're putting $1 billion. It's a provision. Highly likely they won't end up spending a cent. They're just doing it as a publicity stunt so everyone thinks they're doing something. But when they don't pay anybody out, it'll just end up back as profit. But holy mackerel, look at Microsoft. $39 billion profit. No wonder its share price. Look at that, 30%, 31, 46, 27% increase in the last 4 years. That's incredible. Yet, it's still the same company. It's still the same product. It's just bought out everyone that could be potential competition. And there's Pfizer, 11 billion. It had a bad year apparently, but it still went up. And Coke, well, if you don't pay for water, your profit can go from 1.2 to 6.4, and its stock went up 19%. I'm worried about Coke because they're probably going to have the last few drops of water anytime soon out of those Great Lakes and down in Australia. What are they going to do when they have to actually pay for water? Someday, surely, we're going to say to Coke, you have to pay at least 20 cents a litre. You're selling it for $3. You can't have it for free. And they go, oh, but it falls out the sky. Well, you put your own roof tank in, mate. If it's that easy to get a bigger roof, use your own water, don't use ours. 20 cents a litre at least. But look at that, they're phenomenal. And look at those growth rates, they're pretty strong. Now you can see Microsoft went up 27%, but the Dow only went up 3.6. And this again is how we get confused, because they make one company grow up a lot and they make another one go down a fair chunk. You look at, say, HSB as an example. So we don't know what their number is. We say, oh, it's only 3.6. But somehow they either didn't have Microsoft or it's on the NASDAQ, I suppose. It's just crazy. This is the thing. But there's good old Australia, 8.1%, following up another sensible year of 8.9. And there's the FTSE, just 0.6. Again, you'd think that the FTSE would have collapsed with all that's going on there, but it's okay. Again, we're jostling, we're threatening, we're hoping, we're trying to get advantage, trying to stop their getting advantage. That's what negotiations are. And Trump apparently is the master of negotiation. Just ask him how he dealt with North Korea. But these are all the things that happen in a commercial world. And again, we're more and more immune to it on a constant basis. Here's the long term, and you can see we've been a long time on the up. It was fairly flat on average, but again, I don't see a big crash coming. Those mini crashes, absolutely. So prediction number one, stock market, bit of same next year as this year. Asterisk, watch the political space in America with the election. That's going to have a big bearing. You know, it could be a lot of cash out. That's what's going to happen in America. If they think Trump's going, expect to see a lot of profit taking, which coincidentally will just take 10-15% off the market. But then expect a rally if he gets back in, because they know no rules, do what you want, take whatever you want, wild, wild west. So that's going to be interesting, but Australia will be fairly consistent and fairly stable, and everything should be okay. So prediction number one, a little bit carbon copy, you know, see how it goes. Let's look at the dollar.